to see you. Don't forget to get your copies, okay? Okay. Now, remember that of course, we've been talking about shares, and then you know that at this level you understand what it means to have a share in the company, right? Good. Now, remember that having shares in a company is more like an investment in that company, and there's bound to be a reward for having shares in a particular company. So that means that what every shareholder, okay, is entitled to some sort of reward for investing in a particular company, or for investing in the ownership of a particular company, or for having an interest in a particular company. Now, as a shareholder, ordinary shareholder, basically, you are entitled to what is called dividend. Okay? Of course, in recent times, we have, I think, about a couple of banks, two banks basically, popular banks. Let's just make use of an example. Two popular banks declared dividends, interim dividends. Interim dividends simply means dividends declared, okay, before the final results. That is usually media, banks or companies can declare dividends. But when you declare dividend before the final results, of course, you know that accounting for a particular organization is prepared annually, and then sometimes businesses declare dividends, maybe media, so usually refer to that as an interim dividend. Okay, interim dividend. All right, so I think a bank declared in Nigeria, basically recently, there's one that declared over 12 billion, about 12.96 if I'm not mistaken. Another one declared over 9 billion. Okay, interim dividends. Okay, so I already explained what interim dividend means. Okay, but then that is not really our focus. We're trying to look at how to account for dividends. Because when an organization declares dividends, how do we account for it? So now, not to waste our time, already I've explained that dividends, it's more like the reward, or it's the reward for having shares in a particular company. So when you have a share in a particular company, ordinary share basically at this point, or in this class, we're looking at ordinary shares, okay, you're entitled to dividend. So dividend is more like the part of the profit of the business distributed to what? Shareholders. So as an ordinary shareholder, of course, more like the owner of the business too, you know, you are entitled to certain part of the profit of the business. So when profit is made, okay, usually directors are expected, to what, give part of the profit to owners of the what business. Of course, that's a way of, rewarding those whose money, okay, is being used to run the activities of the business. So dividend is one of them. And then when you declare dividend like that, of course, you're supposed to what? Account for it. Like I said, your dividend is taken out of your what? Profit. So if, for instance, you made a profit of 10 billion naira, now out of this 10 billion naira, you can declare, let's say, 3 billion naira as what? Dividend. So what this means is that what? 10 billion naira is the profit made, 3 billion is dividends, then let's say 7 billion naira is, say, undistributed. So what I'm saying is that usually when a profit is made, we expect to distribute it accordingly based on the recommendations of the directors, of course. So that part that is not distributed is called undistributed profit, basically. Now remember that, of course, if you look at your karma, of course, when dividend is declared, before it's final, you can have adjustments, okay, by directors. And then for dividend to be declared, there's, a caveat that is usually followed, which means that, for it to be declared and then even possibly paid, you have to be able to, convince, decision makers, basically, that if the dividend is what's paid, it will not affect the settlement of the liabilities of the business. Of course, when a business is owing, and then payment of such debts by the business is very, very important. You don't expect to, want to pay dividend at the expense or at the detriment of liabilities that is due for payment. So it's expected that liabilities ought to have been settled before payment of dividend. So when you're paying dividends, you have to be able to be sure of the fact that the payment of the dividend will not affect the payment of liabilities. Of course, that those you owe might want to take up actions that might affect the business activity. So you have to be able to manage that area first before looking at paying So you should look at your karma, basically. Now, in order not to waste our time, the idea here is that where you declare dividend out of profit, remember that your profit is part of your reserve. So of course, where you make profit and you do not distribute it, that means to stay in the business. So that is a reserve. But where you now take part of it as dividend, it means that you are technically owing the investors, which is the shareholder. So it means that if you have made 10 billion, for instance, and this 10 billion, 3 billion is dividends to shareholders. It means that the business is technically owing the shareholders 3 billion. That means when you declare a dividend and you are yet to pay, it is a liability to the business. Okay? So what we're saying is that at that level of declaring the dividends, the business becomes indebted to the owners of the business. So dividend proposal, dividends were declared but yet to be paid are treated as liabilities. Then the balance that is undistributed remains as your as your reserve. So of course, don't forget that your reserve represents an income in this instance. And incomes have credit balances. Don't forget that your asset and your expenses, they behave in the same manner, while your income and your liability also behave in the same manner. Okay, so that means your reserve is more like an income, has a credit balance. Dividend declared but yet to be paid is liability, right? Of course, that's credit as well. So what I'm trying to say is that if you did not declare dividends, the total profits becomes part of your reserve. But when you declare dividends, the dividend declared becomes a liability because you're technically indebted to the shareholders. And then the undistributed profit becomes the reserve. Okay. Now understand, I don't know, you should refer to your class on withholding tax. When you're treating dividends, there is an element of withholding tax. Okay, there's already a class on accounting for withholding tax, and there I explained in detail how to treat withholding tax. So, of course, withholding tax on dividends, right, is 10%, both on individuals and on limited liability companies. So remember, withholding tax charged on individuals payments or payment to individuals are remitted to the state revenue service, while withholding tax charge on payment to limited companies is charged to what? The Federal Inland Revenue Service. Okay, of course, I've told you that withholding tax is more like an advanced tax. Okay, so what it means is that the person that is suffering the tax utilizes it to what? Reduces what? Is income tax liability. So that is why that of individual, because individuals usually pay their what? Income tax or salary tax to their state revenue service, while businesses, limited liability companies pay to what? Federal revenue service. So that's how they can utilize it to reduce their what? Income tax liability. So that's why individuals, when you charge withholding tax on their payment, you take it to the state revenue service. Then for limited companies, when you charge withholding tax on their payment, you take it to, you remit it to what? To the Federal Revenue Service. So when you're paying dividends, of course, your shareholders can be individuals, it can be what? Organizations as well. So in that case, dividends that has been declared and payable to individuals, of course, upon payment, you're expected to charge withholding tax and remit to the State Revenue Service. Dividend that is payable to limited companies, of course, upon payment, you charge withholding tax and then remit it to what? To the Federal Inland Revenue Service. So what I'm trying to say is that now look at this, for instance, you've declared what? Dividends of what? 3 billion naira. So technically the 3 billion becomes what? The liability, right? So we can say dividends payable, right? Of course, remember, we have what we call withholding tax payable, right? Withholding tax what? Receivable, right? So this receivable withholding tax now is that which we suffer as a business from our clients that is supposed to pay us. While withholding tax payable is that we withhold on what? Invoices that we're supposed to pay vendors. So we remit this, client is meant to remit this, right? So there's a way to what? To account for them. Of course, withholding tax payable is more like a liability. Withholding tax receivable is more like what? An asset. So you have to understand that. So, but dividends now, it's a payable. So we're looking at withholding tax payable here. So now dividends here, if we declare 3 billion, so it means that shareholders are entitled to what? To be paid 3 billion, technically. But because of the withholding tax implication, which is 10%, it means that what? These 3 billion, are you there? The shareholders will not be paid the entire 3 billion. We're going to withhold 10% of 3 billion that will be remitted to what? The appropriate tax authority. So it means that what? The shareholders will be paid less than 3 billion. That's, we're going to deduct 10% of the 3 billion before paying the shareholders. Then the 10% deducted, of course, will be remitted to what? Inland Revenue Service. So in order to make it easy, let's use very, little figures so that you understand what I'm trying to say. So let's assume that we declare the dividend here. Dividend declared here, let's say 100 naira. Okay, so this is what the business is owing shareholder. But upon payment, we're going to say withholding tax on what? Dividend, right? Dividend payable. Of course, that's 10% of 100 naira. That will be what? 10 naira. So it means that this 10 naira now is withholding tax payable that will be remitted to what? To the what? Inland Revenue Service. Then dividend that will be paid to what? To the shareholders will not be how much? 90 naira. So shareholders will be expected to collect 90 naira from us, while the Inland Revenue will be expected to collect what? 10 naira from us. So total amount that has been declared, of course, is 100 naira. But 90 naira is what we're going to pay the shareholders. Then we're going to remit 10 naira to the Inland Revenue Service. So if the shareholders are into categories of individuals and limited companies, individuals go to what? State Revenue Service. Limited companies go to what? Federal Inland Revenue Service. Of course, because we are here to pay your dividends payable, which is 90 naira, it's a liability. Then withholding tax on dividend payable is also a liability. Then upon payment, you remit to what? The appropriate what? People. Pay 90 naira to the what? Shareholders. Remit 10 naira to the revenue. So of course, in the name of the what? Of the shareholder, so they can utilize it appropriately to reduce their what? Income tax liability. So this is a summary of accounting for what? Withholding for dividends. Of course, taken into consideration was the withholding tax element of dividends. Of course, I expect you to go and take the class on withholding tax. We have a class on that, so that will also help you to have an idea on how to account for withholding tax as they would come up. But in this case, we only look at it while treating what dividends. If you have questions, you can reach me on the numbers displayed. I'll be there to reply with the right answers. We look at this question so we can understand what I'm talking about here. So here we have the following trial balance has been extracted from the books of Mega Forest Limited for the year ended 31st December 2019. So we have sales 350 million, equipment at cost. We have 20 million, furniture and fittings at cost. We have 25 million, land and building 44 million. Inventories are 1st January 2019, 5.2 million. Purchases there is 400 million. Transportation is 900,000. Salaries there I can see 15 million. Rental income 5 million. Promotional expense 4.2 million. Debtors 49,500,000. Cash at bank there I see 105 million. Vendors is 10 million. And I have 100 million ordinary share capital at $1 each, because that's 100 million. Repairs and cleaning there is 500,000. Plant and machinery is 60.3. Our vehicle there is 15 million. Then we have the balance sheet. And then here we have additional information. The directors decided that 20% of the profit made for the year after tax is to be distributed as dividends to shareholders. We have closing inventories there, 1.2 million. Salaries in advance amounted to 2 million. Depreciation for the year was charged at 10% on all assets except land and building. It was also decided to make provision for tax at 32% of profit made for the year. Quite strict questions. They are saying that what you're required to prepare income statement for the year ended at 2019. Statement of general provision as at 2019. So at this level, you should know the requirements there. Okay, so let's quickly look at the question. Let's look at the question there. Don't forget to grab your calculator, because you'll be needing it. So you grab your calculator. Okay, so let's go there. We have a question there. We have Mega Forest Limited. So we have okay. Let's go. Income statement, right? For the year ended 31st December 2019. Of course, at this level, you know how to prepare this. Otherwise, you should take your class, okay? So we have notes here, right? So turnover, that will be note 1. So let me put that note 1 here. Let's put that note 1 here. So we have note 1. So what's our turnover here? Sales, basically. Sales here, you can see 250 million. Right? Yeah. Is there any other thing that reduces the sales there? No. So what do we have now? Sales is 350 million. So that'll be 350 million. So what's the next one? We have cost of what? Sales. That's note 2. Let's call this note 2. Okay. So how do we do it? So the first thing there, we have opening inventories there. So that's like opening stock, right? So what do we have? 5,200,000. 5,200,000. What's the next one there? Purchases 120,400. 120,400. So when you add, you have 0, 0, 6, 5, 2, 1. Okay, any other thing there? Maybe like returns and all that. It's nothing like that here. So what's the next thing here? We have closing inventories. So now our closing stock here. So what do we have there? 1,200,000. So we have 1,200,000. So when you take that out, 0 minus 0, 0. 6 minus 2, you will be 4. 5 minus 2, 4, 2, 1. So this is what call this your cost of sales, right? Right? So that will be what? 1, 2, 4, 400. So when you take this out, 0 minus 0, 0, 0 minus 0 is 0. 10 minus 4 here, 6. 9 minus 4 will be 5. 4 minus 2 will be 2. 3 minus 1 will be 2. So this is your what? Gross profit, right? So let's go. Other income. Then other income, let's call that note 3. So we have note 3. So any other income there, according to the question, any other income there, I can see rental income. Rental income is 5 million. So we have rental income. 5 million. That's all. That's about all. So this is 5 million. So other income is what? 5 million. So when you add up 0, 0, 6, this will be 0, 3, 2. So this is your what? Let's call that gross income. Right? So what do we know? That's the total expense. So the expense is note 4. So let's put that here. Okay. Note 4. So what are the expenses? What do I see here now? Transportation. So what's transport? According to the question, 900,000. So we have 900. What's the next one there? Salaries. Salaries there, I see 15 million, but there's information on salaries there. Salaries there, and see advanced salaries is 2 million. Of course, at this level, you understand what prepayments are. So you should take the class on prepayments, okay? So prepayment is like payment in advance. So that will reduce it in the expense, but then that will increase your asset. So we have 15 million minus 2 million. 15 million minus 2 million. So that will be what? 13 million. What's the next expense there? What's the next expense there? Promotional expense. So we have promotional expense. Okay. So what's it in the question there? Promotional expense is 4,200,000. So what's the next item of expense there? Repairs. You can see repairs and cleaning. 500,000. Repairs and cleaning. 500,000. What's the next one there? Depreciation. Okay. So we have depreciation here. Of course, there are how many assets we have? Equipment, furniture, land and building. We have plant and machine and vehicles. But then depreciation is on all except land and building. So we have depreciation on equipment there. equipment. That's 10% of cost. So 10% of 20,000 there, 20 million there, 20 million, 10%, that's 200,000, right? Is it? Is it 2 million? 0.1 times 20 million. 2 million. So that's 2 million. What's the next one there? Furniture and fittings. Furniture and fittings. That's 25 million. That'll be 2.5. What's the next one? Land and buildings exempted. What's the next one there? Plant and machinery. 16,300,000. That's 6030. What's the next one? Vehicles. 15 million. 10%, that should be 1.5. That's about it. So what do we have there? Total expense there. Okay, so we have 900,000. 900 plus 13,000 plus 4,200 plus 500 plus 2,000 plus 2,500 plus 6,030 plus 1,500. So I can see here 3630. Total expense. 3630. Take that out. We have 230,600. So this is 199,970. So this is your profit for the year. Now they're saying that what do we have there? It was that we make provision for tax at 30% of profit made for the year. So tax provision there. Okay. So what do we have now? We have our tax provision. Let's call it taxation. Okay. That's at 32%. 199,970. Okay. That'll be times 0.32. So this is 63990. Okay. Of course, this is taxation. And then this profits after tax, that will be this minus this. Okay. So let's say 63990, or let's say 19970, 199,970 minus 63990. Formula that is what? 135,980. Okay. So they're saying what again? What are they saying there? 20% of the profit made for the year after tax to be distributed to shareholders as dividend. So 20% of this, so we say dividend now. Okay, now 20% of this. Okay, times 0.2. That's 27,196. That's dividend. So of course you can show your dividend per share. you can show your earnings per share. Okay, dividend per share, of course, is the dividend payable per unit. Okay, so here we can just say this is total dividends declared divided by the number of what? Ordinary share units. Okay, so you can do earnings per share. Earnings per share is like profit after tax divided by the outstanding what? Ordinary share. You can even do diluted based on the requirements of the International Accounting Standard. Okay, so but let's just focus here. So on your own, try the dividends per share, try earnings per share. Okay, if you have questions, you can reach me on the numbers displayed. I'll just reply with the right answer. So here we have dividends declared, 27,196. We have profit after tax here. Okay, so if we have this as dividend, this is profit after tax. So this is profit for the year. When you take out tax, you have profit after tax. When you take out dividends, okay, so what you have is, you can call it undistributed what? Profit. Okay, so we can just say what? Undistributed or unutilized profit. So that can just be what? 1,359.80. Okay, minus 27196. That will be 108,784. Okay, so that is it for the income statement. So let's quickly show the statement of financial position here. So let's go. Is as at 31st December 2019. But before we do that, don't forget that now you have the dividend. This is dividend declared, right? So if you want to account for the withholding tax aspect now, so this is dividend payable. Let's do it here. So this is dividend payable. Okay. So that'll be what? 27,196. Okay. Right? Then we now have withholding tax on dividend. Okay, so let's do 10%. Okay. That'll be 27,196 times 0.1. So that'll be 2719.6. So now this is later on dividend, this is dividend pay. But then because of this now, dividend payable will now reduce because you're taking this out of dividend. When you want to pay, you take this out, pay this towards the revenue service, then the remaining you give towards the shareholders. Okay. Now this is withholding tax on dividend to what? Revenue service. Then withholding tax on dividend to shareholders now will be this minus this. Okay. That'll be minus what? 27,196. Okay. Minus 2719.6. So that would be what? 2719.6, excuse me, 2719.6 minus 2719.6. So that would be 24,476.4. Okay, they are both liabilities, but one is due to what? Shareholders, the other is due to what? Revenue what? Service. Okay, so let's proceed there. So what do we have here? I'll call these notes. Okay, so let's say assets, right? Non-current. What are the non-current assets? So let's call this note 5. So let's say note 5. Okay, so what are the non-current assets there? Equipment. What's the equipment there? 20 million. It's 20,000. What's the next one? Furniture and fittings. What do we have? 25,000. What's the next one? Land and building. What do we have? 44,000. Plant and machinery. 60,300. What's the next one? Vehicles. What do we have? 15,000. So add everything up. 20,000 plus 25,000 plus 44,000 plus 6,300 plus 15,000. This is 164,300. So you take out accumulated depreciation because that's all what you have here. 2,000 plus 2,500 plus 6,030 plus 1,500. That's 12,030. So we take that out. So this is your what? Carrying amount, Abi. What is also called net book value. So we have 152,270. 152,270. So we have current assets. Let's call that 6. Let's bring that here. 6. So what are the current asset items? Debtors. Okay. What's the debtors there? 49,500. What's the next item? Cash and bank. Let's call that bank. What's the bank there? 105,000. What's the next item there? Your closing stock. 1,200. At this level, you should know all this. What's the next item? Done closing stock. What else? This, what? Prepayment, salary prepaid, prepaid salary. Prepaid salary. What do you have there? 2,000. Okay, any other thing? Any other thing there? So that's it. So what do you have? 49,500 plus 105,000 plus 1,200 plus 2,000. So what do you have? 157,700. 157,700. That'll be plus 152,270 plus 157,700. So what do we have here? 309,970. So this is represented by liabilities, right? So what are short-term liabilities there? Let's call that note 7. So what do you have? Vendors, 10 million. We have vendors, that's more like your creditors there. 10 million. What else? What else? Okay, remember that there's a tax provision. Okay? We made some profit for the year. we provide for tax. Tax does not belong to you, it belongs to the government. So you're owing the government for tax. So let's put our tax provision there. So what's our tax? 63,990. Dividends. We declare dividends, right? Dividend declared. Now you are owing the shareholders. But here it's analyzing to what? Payable and withholding. So we have dividend payable, right, to shareholders. What do we have? 24476. 24476.4. Then withholding tax on dividend, right? What do we have? 2719.6. 2719.6. Any other item there? No other item there. Okay. So we have 10,000 plus 63990 plus 24476.4 plus 2719.6. 101186. So we have 101186. 101186. Okay, so what's our reserve here? Note 8. So we'll call that note 8. So what's the reserve? Reserve here is going to be the undistributed what? Profits. 10. Ordinarily the reserve had been 199, but we took out some items. We took out tax, we took out dividends. So the remaining one there is the reserve. So we have undistributed profit. That's 108784. 108784. Right? Any other item? No. So we have 108784. Right? So what's the next item there? So we have ordinary share capital of 100,000. So we now have ordinary share capital of 100,000. Okay. So when you add this, and this, you have 309970. 309970. That's 186108. 101 186 plus 108784 plus, and so you have 309970. So this is your total liabilities. Right? So this is your total assets. Right? So 309970, 309970. So you can see your total liabilities is equal to your total assets. Okay, so what we've done here is to show how to account for what? Dividends with provisions for withholding tax elements. Okay, so we can see the income statement, down to the notes and then to the statement of financial position. Right, so you can go through that own. If you have questions, you can reach me at the number displayed. I'll let you reply right. Don't forget, you can support us by printing the account displayed or sponsor copies for textbook for free distribution. Thank you.